Hey all, welcome to ShareTreck. This is Raj here. Friends, I've been having some trouble with my computer setup. My OBS, which is the broadcasting software that I use, and my browser, they don't seem to be working very well together. I have got to get this fixed for once and for all, but I discovered that I did an entire live stream which never went across to the viewers. So I'm doing a very quick pre-market video right now. I'm going to keep it very short. The first thing I want to say is that if you look at NASDAQ futures and all the futures out here, most of them are mildly red. And also what I would like to communicate is that there is still a whole lot of uncertainty premium out here because Trump has announced the 25% tariffs on all cars not made in the United States. But the fact remains that no car is 100% made in one country. The parts are from other places, and especially for North America, the USMCA or the NAFTA had bought a lot of interchange between the three countries, US, Mexico, and Canada. So the parts are from different places and different components are assembled in different places before a car is complete. So how they're going to implement that is a big question. The other thing I would like to point out here is for Tesla, those people who are looking at Tesla shares. Tesla shares have dropped on plunging European sales. So that's one headline. And apart from that, I think in Australia also the shares have share of Tesla has dropped. Market share has dropped. And even though they have got manufacturing in both Europe as well as China, they can use that to their advantage by selling Chinese-made cars in China and German-made cars in Europe. But if the other countries also decide to focus on Tesla because of Elon Musk's proximity with Trump, then they could come up with some kind of rule or regulation which can penalize Tesla. So that risk still remains. And then Trump says Tesla CEO Elon Musk didn't advise on auto tariffs because he may have a conflict. So that's a good news out there. But the fact that the US government has to come out and make that kind of a statement shows that there's a little bit of credibility problem out there which they need to address. Those things do not work out very well for capital markets, especially when international investors put money in the capital markets. And the rule of law seems a bit porous. Next, Trump says that he may reduce China tariffs to help close a TikTok deal. That could be a good negotiation point. But again, this gives you an idea of how fluffy the entire administration policies are, and they could change on a dime. And everything depends on what Trump thinks the morning that he wakes up. Maybe Trump may have a particular idea right now that if the TikTok deal closes, then I'm going to give some concession to China. Or maybe tomorrow he can change his mind and think the TikTok deal is not good enough. I want something else before I can reduce the Chinese tariff. So all these uncertainties will be there. So as retail investors, not as political people, but as retail investors, we need to be aware of the politics, but keep a level-headed mind. We have to react to what happens rather than try to front-run this market. If we react, then we could probably take some profits. And I'm thinking that this is more of a market where covered calls and maybe puts are much more beneficial than actually owning the stock. Then you look at the economic calendar, we're going to get GDP growth rate data very soon for 2024. And once that number comes in, that will give a little bit of extra certainty to the Fed. And that will also have an impact on the bond market. And if you look at the bond market out here, you would see that we have the 10-year yields moving up. And the Trump administration doesn't want the 10-year yield going up. They want it to go down. So it's moving in the opposite direction. It has now converted all the exponential moving average to become its support. And the MACD is healthy and the momentum is also picking up. So this indicates that the market is fleeing into the safety of bonds, which means the money is going to come out of stock market and get into bonds. So that's one way I'm looking at it. And then if you go and have a look at the stock market heat map, I would say that consumers are moving into the consumer defensibles and utilities are the ones that are helping the market, which indicates that people are moving to relative safety of these boring defensive sectors. If you look even at a 1 week performance, you'll see that consumer defensives and energy had been doing quite well. So I would expect utilities also to pick up today as we move into the market, because these are all the fundamental defensive stocks, and I would expect them to pick up. And having said that, I would just like to quickly show you the XLP because XLP is another place where you may find that we are trying to create a reverse head and shoulders, which is a very bullish pattern. And if this reverse head and shoulders is created, and if we cross the trigger point, which is the neckline of the head and shoulders, then I would say that I think the neckline for this would be somewhere around, at the very least, around 83.53. So if we cross that on XLP, then we are in for a huge rebound. So this could also indicate that people are getting a little bit jittery with the market. Having said that, let us quickly move on to our S&P 500. I'm going to take you to the S&P 500 futures first. S&P 500 futures are looking weak right now. It's down 0.09%. It's sitting on a very delicate support at 5,738. And also the confluence of the 200-day exponential moving average with that. This is a very strong support, and the resistance is the 9-day exponential at 5748, failing which the 20-day resistance at 5776.26, the 20-day exponential, is going to hold us back. If we fall below this, then it's going to be very bad for the index, because the next support is way below at 5680.25. Nasdaq is down 0.22%, and it's sitting on a support of 2038.50. I would say that this is a very critical support, because if we break down from there, we are going to go directly to 19,749.75. So it's a critical day, my friends. You have to be watching very carefully the market react, but do not try to front run it. That's what I would advise. Nvidia is down 1.72%. It's fallen below this diagonal line of support from a previous bear channel, and right now that support will end up becoming a resistance and will fall back into the previous bear channel, and our next support is going to be at 109.45. That's the support for today. And if you look at Meta is going down. It's gone down 0.78%, and it's below the 9-day exponential moving average. So the 9-day exponential is going to become our resistance, and then our next support is going to be 581.20. So if it falls, it could fall big deal. Google is going to form a very slim candle, because it's up 0.12%, and it's going to face resistance from the 20-day exponential, and it's going to have a support somewhere around 165.78, which is this diagonal line of support from a previous bull channel. So I'm going to mark that green out here. And then if you look at Amazon, it's down 0.22%, and it's being supported by the 200-day exponential, which is sitting at 201.01. Unfortunately for us, in pre-market trading, we have fallen below that, and we have gone to 200.68. So the 200-day exponential is going to be a resistance for us today, and the 9-day exponential is going to be a support for Amazon. And if we break the 9-day exponential support, then our next support is going to be this horizontal line of support out here at 195.64. Apple is down 0.14%, and it's going to be prevented from going up by the 20-day and the 200-day exponential moving average, sitting at around 224.39, and it's going to have a support from the 9-day exponential at 219.97. Microsoft is down 0.01%, and it's going to find good support today at 386.90, and it's going to find resistance at 390.13, which is our 9-day exponential moving average, and from 392.66, which is our 20-day exponential moving average. Tesla has done a trend reversal pattern, but I think it still has got the potential to move up, because it's still above the 9-day exponential, which is sitting at 261.07, and right now we are at 273.15. So the resistance for Tesla is going to be 284.50. Oracle is down 0.47%, and it's got support at 142.73. AMD is down 0.36% in pre-market trades. It's got support from the 20-day exponential, which is exactly at 106.45, and we are at 106.49 in pre-market trades. Failing the 20-day exponential, we'll get support today at somewhere around 103.78, which is this diagonal line of support. And then, of course, SMCI is down 1.11% this morning, and the support for SMCI is going to be 34.68. Next, let us look at AVGO. AVGO is going to have a support at 169.61, and it's going to have a resistance at 178.75 today. And then look at Palantir. Palantir is down 1.25%. It's going to have a support from this diagonal line of support today, and that's going to be very strong, and it's going to be at 89.77. And then if we go on to SMH, it's down 1.06%. And I think it will get a support somewhere around 219.70 today. It's kind of below that already in pre-market trading. So I'll say that the next line of support for it is going to be 214.29. And that said, I would like to bring this video to an end. I'm sorry about the live stream issue, but I promise that I'll get all this fixed up in my computer and I'll have a good live stream tomorrow. And sorry, Hot Dog, I was not there on the live stream, even though you had come in. This Tempus AI has dropped down further, Hot Dog, so I congratulate you on selling it on the right time and booking your profits. It doesn't look that great for Tempus AI because it's going to do the gap fill out there. With that, my friends, I'd like to say bye. I'll catch up with you again in the next video. Bye for now.